Hello everyone, how you guys doing today? Oh, our first fourth session today. We're going to go through essential correlation multi-time frame, a scalping method, and after that we're gonna basically cover engulfing, a very simple approach on engulfings. Yeah, I had a very good week last one, guys. I had a very good week. I had like got more than 50 R that week, bro. Like above 80% win rate. It was a very good week, alhamdulillah. And so let's wait for the others and we can start as always. Yeah, sure. What are the questions? If they are still in the group, just send them over here, please. Yes, exactly. Now, um, in case of weekly reject weekly, then daily breakout, I'm going to give you the very exact example of that. Take a look at here. So here what we had was a weekly reject weekly, right? Weekly reject weekly. All right. After that, when you go to the daily, what do you have? The daily bearish breakout. So as you can see here, daily bearish breakout. Now after the daily bearish breakout is confirmed, the weekly trend is bearish. Now you wait for the pullback to the apex. Right, the apex is right here, but you do not enter off of that. You're fine it to the H4 and H1. So H4 is right here, and then you go to the H1 and take the extreme. Okay. And there is a rule, a certain rule for H1. If the wick is bigger than 40 pips, refine it to M30, okay? So here the wick is 91 pips. You don't want to be entering this zone, okay? If you enter instantly from H1 with a 90 pips in a wick, you're going to have this drawdown, okay? The drawdown here is the reason for this wick. So you can go to the M30 and take the extreme there, okay? Now, that's one way, or you would wait for the M5 lower time frame confirmation there. So yeah, that's how you enter. So weekly reject weekly, daily breakout, daily pullback, you refine it to H4, H1, and if H1 has a long wick, more than 40 pips, you go to the M30. Brother, can you please confirm if you had a confirmed bullish breakout in H4 after we had rejection from the lower wick on the daily 7th February candle? Let me check. 7th Feb. You talking about this candlestick? Okay. So we rejected this level, right? Okay. Now we go to the H4. Now, if you go to the H4, you have a bullish breakout right here. Exactly. Yes, we had the bullish breakout, and it failed. Right? It simply failed. The storyline did not hold for so long. Let me just see here. Okay. Yeah. Any more questions? Yeah, bro. I mean, it's totally fine. Especially with gold. I mean, if you haven't noticed lately, I have more on you. Because gold has been chopping around, and on gold I am more of a swing trader. I don't like to buy, sell, buy, sell, buy, sell. So what was happening to me is that I got many entries, but all of them hit break even because I like to hold it the next daily or next weekly. So any entry you get, I'm gonna hold it for more than 120 pips. Okay, but lately gold has been like going 60 pips, 80 pips in profit, then comes back to break even. And yeah, that happens. Okay, there are certain times and seasons where the market is just chopping around and it is totally fine. Okay, so yeah. Now we're going to talk about the essential correlation multi-time frame today. What's that? Okay, so here we're going to be working with M15 up all the way to H4, and for entry criteria, you can go to M5 and M1. I'm going to be explaining that in a second. Now I'm going to draw a table right here and split it into three. Okay, so what's this? Here on the left, you're going to pick a time frame that is lower than H4, down until M15 max, and it is your fresh AV level. Fresh AV level, simply that. Okay, what you're gonna do is you're gonna pick a fresh AV on this time frame. Now this time frame does not matter. Now give me a time frame, guys. H4, H1, M30, M15. Give me any right here. M15, okay. 15, amazing. Now, once you get your fresh A and V level right here on that time frame, you're gonna drop 2 time frames lower. Okay, 2 time frames lower. Now, on that level, you're gonna drop 2 time frames lower. So 2 time frames lower than M15 is what? Is what? M15, M5, M1. Okay, so you're gonna go to M1. What you're gonna do with M1, you're gonna have a lot of entry types. Okay, one of them is engulfing that we're gonna learn today. So the simple entry is M1 breakout, pull back, and then buy. Okay, right here. So you're gonna have a normal M1 breakout. So for M1, you're gonna be using the breakout and pull back to what? You can wait for the pullback to the extreme level or pull back to the engulfing that we're gonna talk about in a bit. So after you have your M1 confirmation entry, so this is your entry pattern. Where is your TP? Where is your TP? So, and how are you gonna manage your trade? And most of you guys have heard of the term called trade control, and this is how it works. So once you get your entry on M1, your TP is going to be 1 time frame higher, which is on M5. Why is that? Now, we talked about daily reject daily. And H4 breakout. So we said that the H4 breakout starts 1 time frame higher storyline, which is the daily. The H4 breakout starts 1 time frame higher, which is the daily. The same thing goes with this. So the reason why we dropped 2 time frames lower is to get an earlier entry. So from M15, instead of waiting for M5 breakout, we instantly went to the M1, starting an M5 storyline after this breakout, and you're going to TP at M5 AR level fresh. So M5 fresh AV. Okay, so you're going to TP at here. Now, you can instantly TP or wait for other signs. Now, the other signs is you wait if this M5 rejects or breaks. Now, if it rejects, you can instantly TP. If it breaks and you have an M5 breakout, the M5 breakout, what does it start? What storyline does the M5 start? It starts an M15 storyline because it is 1 time frame higher. Okay, M5 breakout starts an M15 storyline. So you're going to have, let's say here it broke. Okay, let's say your TP was somewhere around here. This is your M5. Okay, this is M5, and then price broke it. Once price breaks the M5, you're going to hold the trade to an M15 level. Okay, you're going to hold the price to an M15 level. So if that M15 level rejects, then you're going to TP. If it breaks, you're going to hold to M30, so on and so forth. Okay, so here in this case, let's say M15, M5 broke, so you're going to hold it to M15. Okay, and then M15 breaks, you're going to hold it to M30, okay, so on and so forth. Now here, breaks, fresh AV. Now if M30 breaks, if M30 rejects, let's say this one rejects, R rejects, if M30 rejects, you can enter on another trade instantly after TPing from this one. So let's say you have an entry here and you're holding it, breaks this, keep holding it, breaks, keep holding it to the M30, and then M30 rejects. Instantly after M30 rejects, you can drop 2 time frames lower looking for another entry. So 2 time frames lower than M30 is going to be at M5. So M5, if M5 gives you a breakout, bearish breakout, you can use that again, and so on and so forth. Okay, so it might be confusing at first, but I'm going to show you some examples right here. No, you cannot use gaps for this. Okay, I was using gaps in the past, but now I don't. Okay, so let's take a look at this fresh V level right here. Okay, now once you go to this zone, you can look 2 time frames lower for your breakout. So here you go to the M15, and on the M15 you have a bullish breakout. Now once you have the breakout, you wait for the pullback to the engulf zone, which is right here. Or I'm going to explain that later, okay? Don't worry, guys. Or you wait for the fresh extreme level right here. Now, what's your stop loss going to be? It's not going to be below the low, okay? It's either going to be 25 pips fixed, or it's going to be a copy paste of the engulfing range. So you see, I'm sorry, the breakout range. So here is your breakout range, okay? So you see this breakout range from the high to the low, the high that got broken. You're gonna copy paste this box and put it below the wick, okay? Not below here, below the wick, right here. And that is your stop loss. So you can put a buy right there and a stop loss just right there. Okay, now where is your TP since you had an M15 breakout? M15 breakout, you TP at M30. Now once you go to the M30, you look for the nearest M30 level. Now where is the M30A nearest A level? It's right here. So that is going to be your TP. Now if it rejects, sorry, yeah, it didn't even touch in here. So if it rejects, you're going to close. If not, break, you're going to hold to the H1. So let's go to the H1. Okay, where is your H1? It is an H1 level at the same time. So the H1 also got broken. That means we're going to the H4A level. So where is your H4A level? It is right here. Okay, that is very far. Now you're going to be holding that all the way up to here. And by that, you're going to have an 8.27 R trade. So if you're able to hold that much, then just do it, okay? Just follow the rules. Now, once you have the rejection in here, H4 rejection, you can close the trade right here and instantly drop 2 time frames lower. So 2 time frames lower than H4 is what? Is M30. So you're going to go to the M30 right here, okay? M30 right here. So what do you have? You have an external breakout right here, M30 breakout, pulls back to the engulf, okay? In this case, it was an engulf entry, and here you have an extreme level, but we entered off of this one because basically when you have a level above the engulf, you're going to enter on the engulf better, okay? So I'm going to explain that later on the engulfing part. So here you get your entry, M30, you're going to be TPing at H1. So H1 broke right here. Then you're going to be holding to the H4. H4 broke, then you're going to be holding to the daily. Okay, so once you understand how the time frames work with each other, you're going to be holding buy, sell, buy, sell, buy, sell everywhere. So you can, let's take a look at an M15 example. So let's go around here. Let's take, just look for an example right here. So messy right here in this price section. So if you guys have any questions, just leave them in the chat, okay? In the meantime, I'm looking for some examples right here. Okay, so let's take a look at this example. This is the way you've been trading. Yes, that is how I've been trading EU lately. So I was just combining it with some liquidity concepts that I used to use in the past, and it's not really that interesting. So yeah, that's basically it. And just execute. Oh yeah, forgot to tell you. Don't use this strategy outside of the sessions, okay? Use the ECMTF inside New York and London only, okay? So here you have an M15 zone. So this is an M15 fresh A level. You're gonna go here and 2 time frames lower, which is M1. Okay, and then on M1 you're gonna look for a breakout. So low, high, low, higher, high, no breaks, and then price boom drops and breaks this one, breaks that one. Okay, once you have the breakout, you wait for the pullback to the extreme level right here or the whole angle. Okay, now in this example they're both on the same area, so just execute it on the A level. Okay, so the stop loss, as I said, is going to be either 25 pips fixed or the breakout range. So 25 pips fixed is from M5 breakout and above. So if you enter on M5 and above, your stop loss is going to be at 25. If you enter at M1, it's going to be 15. So here you're gonna go for 15 pips. So this is M1. You're gonna have either 15 pips stop loss, okay, if you're happy with that, 15 pips stop loss, or breakout range. Where is your breakout range? What do I mean by the breakout range? So you see this is the candlestick that did the breakout. Okay, it broke what? These levels. So you're gonna take the breakout range. It's going to be from the low that got broken, okay, to the high that made the break. So from the low to the high, and then you're gonna copy, paste it above the wick. Copy, paste it above the wick right here. And then that is your stop loss. Okay. That could be your stop loss. Okay. It's the same thing for you. Yes, correct. So did I explain the stop loss very well? Did it remove the confusion for you? Amazing, amazing. So any questions, guys? Okay. So here, let's jump in right into the engulfing. So what's the engulfing? It's very, very, very easy. Okay, do not confuse yourself with the keyword engulfing, whatever. It's a very easy concept to learn. So you have 3 types of engulfings. You're gonna have basically 3 types of patterns for the engulfing. You're gonna have the high risk pattern. You're gonna have the medium normal risk pattern, and you're gonna have the low risk pattern. Okay, this is very, very strong. Okay, very strong. I'm going to explain that. So and you have the one in between. Sorry, forgot this one. Okay, so what's this? This is a normal rally in price. So you see price is going up and then instantly goes down. So while it goes down, you see this is a bearish move, so you're going to have mostly red candlesticks. So you're going to look at the last green candlestick, and that is going to be your engulfing, but it has to be fresh. Okay, now let me show you an example of a rally engulfing. So let me go to the M30. Okay, let's go to the H1. So here, okay, this is a low risk example, but let's just remove this part. Okay, just remove this part, guys. Okay, forget it exists. So price here is going up and then instantly down. Okay, so this is a bearish move. You're gonna look for the last green candlestick. The last green candlestick is right here. So mark the last green candlestick and draw it to the right. Now you're gonna ask yourself one question. Where is the candlestick that went out of this candle by a body closure? Okay, so let's say this one has a wick right here. This candlestick went out of it, but simply by a wick. It doesn't count. We need a body closure below it. So this is a body closure below this candlestick. Now here, after it went out of it, you're going to ask yourself, did price ever come back after the body closure outside of it? No. In this case, it is fresh. So you're going to be using that in the future. Okay. So you're going to have the rally example, and you're going to have a normal breakout example. Now let's take a look at a normal breakout example. So you're going to have something like this. We just look for examples right here. So you're going to have something like this. a low, high, low, high, something like this, okay? Something like this. And then this is your engulfing, okay? So this engulfing was fresh, as you can see. After the body closure outside of it, it never came back, okay? So the third example is when you're gonna have a QM pattern. But after you have a QM pattern, price pulls back to the last engulf right here, and it has to be fresh. For the fourth example, you're gonna have to learn something called engulf fail. Now, let's say you have something like this, right? You're gonna have a bullish engulf, and it is fresh. Now, if price breaks it, it's gonna fail. It's gonna be called an engulf fail. Once it's an engulf fail, you can wait for price to come back, but you're not going to sell instantly on it. You're going to wait for price to make one of the patterns of the engulfs that we learned. So you can have a rally pattern, you can have a normal breakout pattern, you can have a QM pattern, and then wait for pullback. So something like this, boom, this is a very low risk one. Or price can do this, okay? It can go down and then make an engulf before it leaves. So in this area, you're going to have an engulf fail plus a normal engulf. Price pulls back, and that is a very low risk setup, okay? So let's take a look at some examples right here. Price did what right here? Low, high, low, high, low, okay? Now here you have the QM pattern. Now price pulls back to the last candlestick right here. Is this one fresh? Yes, it was fresh. Just a second, let me mute the guys. So here, yes, it was fresh because the body closure right here, price never came back. And then once it did, you can sell right here. Okay, that could be a sell, and it is a QM pattern. Now, where is the engulf fail in this scenario? It is here. Okay, it is right here. Because price here made what? High, low, high, low, high, and then price failed this engulf. Now, when does price fail the engulfs? It's when it is against the storyline, okay? It is when it's against the storyline. So also, you can use the ECMTF inside the engulf to know if it's going to fail. So let's say you have an H1 engulf right here. This is an H1 engulf. You can go to the M15 in this area and look if you have a bullish breakout. If you have a bullish breakout, you can use that bullish breakout for a pullback into an engulf and then buy, or wait for price to do a normal breakout downside so you know that it is going to fail. So here, once it failed, you can wait for price to pull back and create an engulf inside, but it did not in this case. Okay, let's say it did something like that. That would be a good sell as well. So let's take a look at some unfresh, basically engulfs. So let's take this one, right? This engulf is unfresh. Can someone tell me why? We don't use the word mitigated. We don't want to basically combine SMC stuff right here. So use the word fresh and unfresh, okay? Body, then wick, exactly. So as you can see right here, we have a body, okay? Body closure, and then a wick. Pull back right here, then basically it is unfresh. You cannot use it in the future, all right? Do chat touches unfresh one. Okay, we don't care about the touches for the engulfs, we just care about the wicks. So price can basically, I'm gonna look for an example right here before. So let's see. Okay, let's take this one. Okay, so you can see the sell right here. This is a normal breakout. Price pulls back and then sells. So the last bullish candlestick before the down move. This is an engulf. When did it become an engulf? Right when the body, right when the closure of this body went out of it. So as you can see, the first one doesn't count, the second one doesn't count, and then when the third one went out of it and closed, this is when it became a breakout engulf. So you're going to use it aligned with the storyline, or you can use the engulf way at looking at the direction. So there is a way that engulf traders look at the storyline. I don't personally use it, but I'm going to teach it to you. So they use the weekly A and V levels aligned with the H4 breakouts, and the breakouts has to be with the wicks, and they use the daily and H1 for a roadblock. Now, here is your weekly. Okay. If you're going to use this, you cannot use the traditional way of looking at the storyline. If you use the traditional way of looking at the storyline, you cannot use this. Okay, so you're going to have a weekly, and you're not going to look at rejection rate here. So you're going to simply look at an H4 breakout, and once you have an H4 breakout with a wick, then price is going to go from the A level of the weekly to the V level of the weekly, and you can sell, okay, on the H4 engulfings, H1 engulfings, M30 engulfings, M15 engulfings using ECMTF. So if you have an M15 engulfing that is fresh, go to the M1 looking for the breakout inside of it. And once you have the breakout inside of it, let's say this is a what? Here is an H1. And this is an H1 engulf. When price goes back to it, you can go to the M15 looking for one of the engulf patterns. So let's say you have the QM pattern. You're going to wait for the pullback to the last engulf candle right here and sell. Okay. Where is your TP? Your TP is one time frame higher engulf. So let's say this is H1 bearish engulf. You're going to look for an H4 bullish engulf right here, and that is your TP. Okay. The breakout has to be with the wicks. I mean something like this. Okay. Let's take a look at this weekly to weekly. So you see this is a weekly A to the weekly V. Okay. Weekly A to the weekly V. Go into the H4. They look for something like this. You see the wick right here? It needs to get broken. The external breakout needs to be with the wick. Okay. It's not the line chart. Okay. Once you have this weekly, basically weekly level, H4 breakout, they start selling from the H4 engulfings, okay, and H1 M30. So you can use engulfings all the way down to M15. So from my experience, I like the M30. Okay, I like the M30 alongside with the M5. This is like my favorite setup. Okay, as well H1 M15. I do not use the H4 engulfing since they are like big zones, and then you're gonna wait for M30 breakouts. I'm not really a fan of that. So I just use the H4 and refine it all the way down. So let's say I find an H4 engulf right here, right? So this is an H4 engulf. I'm gonna refine it down until M30. So I'm gonna have an M30 engulf right here, and then I'm gonna use the M5 on it and then TP on the H1 opposite engulf. So if you're gonna enter an M30 engulf, your TP is H1 opposite engulf. Okay, did you understand that? To break the low of the bar. Yes, amazing, amazing. If you guys are ever confused with anything here, just let me know. Okay. All right. So here you're gonna have H4 external breakout. Basically, it needs to break the wick, and then they confirm that it is bearish. So they're going to be selling from here, okay, from this engulf fail. Look at this engulf fail. Okay. How did I know it's going to fail? It's against the storyline. Also, if you go check ECMTF right here, M30, it shows a bearish breakout right here. So what happened here is that low, high, low, price breaks, engulf fail, pull back to the engulf fail, and then go down. How could you enter from here? You wait for an engulf inside the engulf fail. So this is the engulf fail, and this is the engulf. What type is this engulf? A normal rally engulf. So engulf inside an engulf fail. Boom. Very low risk entry. Price instantly drops. Okay. Any questions, guys? So yeah, the TP, as I said, is one time frame higher. So let's say this is M30, right? Okay, let me just give you a clear example. M30 let's say you enter here. Your TP is at H1 opposite angle. So let's say price pulls back, okay, whatever. You're gonna look for a fresh H1 engulf down there, and that is your TP. Okay, the next engulf fresh. Okay. Yes, H4 M30 is extremely nice as well, but I don't really use that. Okay. All right. Guys, give me around 2 or 3 minutes. I'll be right back, okay? Hello, I'm back. So we're gonna be talking about the order blocks of the weekly to weekly, okay? I personally use this on GJ. Okay? I trade GJ from time to time. This is how I look at the storyline. And I don't use the traditional way. So H4, once you have the H4, you're gonna be monitoring what? The daily ANVs and gaps as well. So for the weekly, it's A and V. For the daily, it's A and V and the gaps. And we get what levels that are fresh. You're going to be monitoring those and H1 if H1 gives you a bullish breakout. So if H1 gives you a bullish breakout, then we're going to be bullish for a while to the next daily level. Okay. So just like here. Weekly to weekly, and then you're going to be monitoring the daily levels. So you're going to be monitoring this daily, and this daily. If this daily gives you an H1 breakout, we're going to go up to the next daily, and then this daily needs to give you an H1 bearish breakout in order for you to continue. Then monitor this daily and this daily, okay? Also, yeah, until you reach the next weekly. So once you reach the next weekly, you can go and look for an H4 bullish breakout. Exactly happens right here. So you're not going to use this. You're going to use the top wick. Once you have that, you're going to go from the weekly V to the weekly A. Okay, from the weekly V to the weekly A. Okay, and then from this weekly A level, you're going to go and look for an H4 bearish breakout right here. Once you have that, then you're going to go to the next weekly V. So from that weekly A to the next weekly V right here. Understood, guys? Any questions? I hope it's very clear for you guys, okay? So basically that is everything it about the ECMTF and the engulf. The more simpler the way you look at the market, the better it is for you, okay? Because the harder it is, it's not good for you guys being recorded. I'm not sure if it's being recorded. If anyone is recording it, please send it to the group later on, okay? So yeah, practice this scalping method so you can basically monitor, I don't know, whatever time frame suits you. So you can take something like H1V level and then you go to the M15, wait for the bullish breakout, train your eyes and your brain on this method because it's going to take some time, okay? It's not going to be very easy in the beginning. Backtest it, okay? I backtest this ECTF stuff. I do not backtest the key SNR levels, the ones that we did on the previous session, because it totally have bad experience with that. But with this one, it's totally fine to forward test and backtest since also it is in the lower time frames. M15, M1, M30, M5, you can definitely forward test that every day for like many, many times, okay? So, yeah. If anything is unclear for you guys, just let me know and I'll catch you up in the next session. We're going to be doing consequent encroachment and I'll give you my risk management plan for prop firms and how to flip accounts. And right after that, we're going to be doing our last session, which is going to be a big refreshment. Okay, so we're going to go all over the whole knowledge again. Okay, so yeah, and as I said the last time, do not try to combine today's knowledge with the last one. It is two total different concepts. Okay, so you can look at the market the way it is from the last session, daily reject, daily H4 breakout, then look for your H4 key levels to enter from, M5 and stuff like that. Once you're done with that, then you can switch and go to the ECMTF looking for lower time frame entries. Okay, so yeah. I don't understand the question, Raul. Okay, so what I'm gonna be doing is I'm gonna be basically finishing up my PDF, and on that PDF is going to be sent before the next session. Okay, on that PDF, I'm gonna be having every single type of ingulf, the rally ingulf, the normal breakout ingulf, the QM, and the low risk one. I'm gonna be having every single type of ingulf with an image of the example, so you guys do not get confused and always have it in front of your eyes. Okay. Yeah. All right, guys. So, and I think that is it for today's session. If you guys have any more questions, please feel free to contact me on Telegram at any time. Okay. I'll give you the homework in the group later on. See you later, guys. Bye bye.